Computer. Awesome. Welcome back. I know it's been long overdue for another call like this. And I kind of like when we have these gaps because it gives you guys a chance to just go and experience the market, go through things. It gives us more of a conversation to have because if we just have these back-to-back-to-back calls, sometimes the information don't settle in or you don't get enough shots at the market to see it play out for you to say, oh, okay, it does actually work. These aha moments have to happen. So I'm glad we were coming back to regroup. I'm gonna share my screen. Which one? There we go. Safari. I'm just gonna share some of what I've been looking at. I know some of us probably traded. Let me move this out the way. Some of us probably was trading different pairs, which is fine. So we'll try to go through maybe the two common ones we use, EU, GU. I'll try to do it simultaneously, and then we'll go into some questions. And I know I have some topics I want to cover, such as inducements, some price action of going into New York's transition. So I really want to kind of give you guys those clear contexts today in how I kind of navigate. So a lot of these markings, I I pretty much do these markings sometimes daily basis. So sometimes I'll just get tired of looking at them, click this and delete it and then redo it over. Why do I do that? It helps with not marrying your analysis. Do me a favor, guys. Let's mute your side. How do I mute every? Okay, here we go. Cool. So let's jump into it. So first thing first, let's cover the topic of transitioning from London to New York. All right. And if anybody have any issues with they can hear me or something like that, I can't see you all on the screen because I have the thing minimized. So either take your mic off and then speak up or send a message because I won't be able to see you guys while I speak. Okay, so first thing first is it's the concept, right? You really want to, some of you guys already have the understanding of the concept, and for some of us who don't fully understand it yet or have a little bit of hiccups with it, let's jump into GBP. Let me do this, GBP. I'm gonna do a different, instead of let's do a one, that's a clean chart. So what you want to do is, it's what I like to do, I should say. One of the first thing I like to do if I come into the market, it's 8:40, 8:30. Mind you, I'm in US. So if you're in London time for you guys, that's around 1300 hours, right? So that's like right before 1400 hours, where it's 2 o'clock for you guys. So first thing I'm looking for, guys, I just need to know, was there a previous day high or low taken? If none of them were taken, like in this case, this is a previous day high, this is a previous day low, price didn't take any of them. In cases like this, you may have a little bit more trouble navigating in the market. You may have a little bit more trouble navigating because you have not had a strong liquidity that's confirming your bias. It's as simple as that. Now, if I come into the session and I have a previous day low or previous day high taken, in this case, how price took it on this side, I'll zoom in, how price took this let me get my highlighter tool. Where's my bar? There we go. How price took this previous day low here on this end. What did you see happen on the next daily candle? It became a bullish direction. This is common. This is what you will commonly see after taking a strong level of inducement like these. Now, in cases where you have this many level of previous day to each other, and this is also a trend line, we know that in trend lines, price is not just going to take it's going to take the whole trend line. Even if it starts pushing away from it, it's going to come back and finish the job. So you always want to keep things in mind, context in mind. You always want to replay these statements in your head. So the fact that price took this previous day low, for example, I would be coming into the market assuming that my bias is buy. Before I even see what's going on, I'm already positioning myself to be a buyer in this market. Granted, it's a seller's market because what? We can high, low, lower high, forming soon to be lower low. So yeah, we understand we're in a selling market. That's going to be going bearish for a bit. In this case, if we're looking at high time frame. But the simple fact that my session opened up, or my session as I'm coming into New York, opens up where a previous day low was taken. Now, to give you guys a small context, remember we're focusing on the transition going into the New York session. You don't want to keep your London bias. When you do that is when you kind of can trip yourselves up because you're so focused on where London had to get to, and the fact that London didn't get to it, your mind may trigger you to believe that this narrative has to still play out, but not understanding when the session volatility is ended, price resets. It needs to build liquidity. It needs to do other things. So it may not continue to do that bias you were expecting London to reach until the next day, perhaps, or the next London session. Or it can just consolidate and do it two London sessions later. So you don't want to hone in on a bias that from a session that's already done with that you traded. What you want to do is reset your mind. I'm coming into the session. New York took a previous day. Well, the morning session took a previous day low. I'm looking for this buy up. So the next thing I'm doing after seeing this and telling myself I'm looking for buys, I quickly either go to the 4 hour or the 1 hour. I'll do the 4 hour if the structure looks like this, right? If I have a structure where it shows me a high and it shows me a low and there was a break of structure, then I'll use the 4 hour. And it's as simple as that. Let's say I'm coming into this right here. I'm not too focused on what's over here, unless it was a medium inducement level or a major inducement, I should say. I'm not really too focused on that. Why so? Because what I'm looking at is what happened from here to here. What did that cause? And what we could see is it took this level, which is the daily high. I'm sorry, the daily low that we had just talked about. So when I see something like this gets taken out and I'm expecting to be a buyer now in this price action coming into New York, all I need to do is from this 4 hour price action, I can see that this high led to this low, caused those breaks. I'm just going to grab my fib tool. I do the same thing if it was on the 1 hour. If there was no structure, meaning price, let's say price was only right here when I'm coming into my session, meaning these candles right here, these consolidated candles, excuse me, let me give you guys clarity. If these, oh, actually, I already got it here. If these candles here were not created yet, right? And price was simply around this candle right here that's being formed, then I would go to the 1 hour. Why? Because then I haven't had a clear break of structure from the 4 hour to use as an understanding that there has been a BOS. And whatever happens after BOS, we all know is there should be a retracement or there will be a retracement. We don't predict that it has to happen immediately, but we anticipate that there will be because the market has to rebalance. So the simple thing you just want to immediately identify after you've seen your high-low break of structure is your dealing range. Dealing range come next. So first, we want to find, did we take a previous day high or low? That's first. Second, we want to say, where is my dealing range? Those are the top two things you need to know when you're coming into the session. If you can't identify your dealing range, chances are the market hasn't created it yet, which is why I said if it was in this area, these body candles didn't create yet to break the structure, then I don't have a dealing range yet. I will still be looking at price has just taken out this dealing. Oh, I'm still on my fib. I'd still look at it as, oh, price is taking out this level. So my dealing range is still this one that just got broken, but we haven't come to a stop yet. So I can't pinpoint where's the low that it's going to be. In those cases, you don't predict a retracement. You wait for confirmation still. All right. So I know my dealing range. Boom. So we have that clear understanding. Let me delete these to keep a clean chart. Let me zoom in closer. We understand that we have this dealing range. So now all I'm going to do is mark the high and the low of that dealing range. And I'm gonna make this bigger too. Which one is it? Is it style? Yes. Cool. So boom. So now looking at this, right? This is all you needed to know. Now you understand what you're trading in between. That's all you need to know. Okay, well, I know I'm trading for New York session between this high. Oh, never mind, I didn't mark it. I know I'm trading between this high and this low. That's all I'm trading in between. If you're under 50%, meaning the candles are here, you haven't broken above 50%, and you're currently right here coming into your session, you look for buys. Anytime you're under the 50%, you look for buys. If you came into the session, You came into your New York session. I'll repeat this. If you come into your New York session, you are in these areas. You're looking to buy up because you are in a discounted area. You can't look to sell in a discount because what happens is price will come, induce, and turn around on you because you think it needs to come break this level. But price says, I'm just going to take these equal lows that I built here, induce it, and then turn around and take you out. You don't sell in discount and you don't buy in premium. And if you're in the between, you're not sure, let's say you're right here, you're not sure price is threading the middle, just stay out the market. Wait for it to give you a mitigation of a premium level before you take anything. All right, so let's continue. So we can identify this is the dealing range. That's step one was high time frame liquidity. Step two was a 4 hour or a 1 hour BOS that aligns with your bias. Why does this align with the bias? Was the first thing I said. I'm coming into the session, I'm looking for bias. Before I saw what was happening lower time frame or the 4 hours, my daily already helped me with my bias, assuming that these was a build chart. Remember when we started from the beginning. So when price took this one, we said, okay, we're looking for buys because a previous day low was taken. A major inducement was taken. So we can expect a major reaction. Now, does the buy has to happen immediately in that New York session? Not 100%, because price can say, you know what, before I make the buy, I'm going to consolidate and build some liquidity. I'm going to take it after kill time window and begin the move up towards premium. And then you may have to end up catching the continuation in London because after your session, the buy already started. That doesn't mean you missed out. It just wasn't within your kill time window. So you position yourself for the next session to continue towards the premium level or a medium inducement if there are medium inducement levels before your premium, right? So I don't confuse you guys. Let me carry on from right here. So if my market is right here and I'm on the 4 hour, I have my dealing range. I have my premium and discount level of my fib tool. I don't have to jump to the 1 hour at this point because I already have it on the 4 hour where it gives me clear dealing range. I can just jump to the 15 minute. Why am I on the 15 minute now? Is just to see where is my medium inducement levels. I already know we've had a major inducement, which is why I'm interested in buys, but now I need to see where is my medium inducement because when I take a buy, chances are when I sweep a medium inducement, price will retrace because if let's say, for example, in this case, premium is here. This is a medium inducement level. This one was also taken. As we've learned, medium inducements are supposed to cause reversals. True. But the reversal doesn't always mean it has to reverse and take the swing low that it came from. And I've said this in a previous recording, the reversal can simply be the cause of the retracement. Retracement to where? The discount level of this low that led to this high, that broke this structure and this structure. Well, why is this structure significant? Because this is an M15 structure. It was responsible for the break of this low. So now price was able to push up and break above this one and swept above here. So you don't look at this and say, okay, well, price didn't close a body above here, and it also took this level here. So 2 levels of medium inducement, we're for sure going to come take this low. You don't want to make those types of predictions. That's not your job. Your job is to simply capitalize on the move that will come from that. From this case, you only should be targeting the 50% range of this move. You don't need to swing trade it all the way down to the bottom. You don't need to swing trade it. All you need to say is medium inducement level happened. I want to see how is price going to show me my setup in my key time window. So let me clean up my chart so we can see everything clear. Cool. So we can see that we took these two previous day highs. It was equal highs, price left, London high, New York high. FYI, anytime you see a London high and a London high and a New York high resting each other like this, price is going to take it. It is a high level of liquidity, a high level. That's basically two medium inducements sitting to each other. So that's a high level of liquidity you're going to get a reaction from. So in this case, you can already see, I'll tell myself, and if I'm in your, hold on, I'm getting a random call from my other, Hold on, guys. Let me cancel this. One second. Okay, sorry about that. And let me make sure everybody can hear me. I just came back. Everybody can hear me? Good. All right, let's continue. So we got this medium inducement happening. If I'm paying attention in the session, boom, I'm watching this. Oh, wow. Price just took these two highs. It wicked above. It didn't close a body. And it's I don't know if it's going to shoot down yet, but this is what I'm seeing happening at my key time window. Let's say the session already opened at 9 a.m. right here, obviously. Let's say, let's see if this is a 9. Yes, at 9 a.m. price opened up and this move already happened here. This is what now? Now we're at 11:15 at 11:15. So let's say you missed this 9 a.m. push because you didn't want to sell, right? You wasn't able to capture when the buy was going to happen because you knew this medium inducement happened here and you was waiting for a buy, but you didn't catch it. Why? Because you wasn't sure. You saw this consolidated range and you was like, well, I'm going to wait for price to take it out. And then price kind of took it out right here, but then it did this move and then it came back here again. So you were a little bit iffy. So you played it safe, right? Let's assume you played it safe because you're saying, well, this high led to this low, and this low led to this high, and it didn't break above this high. So therefore, if price comes back, this zone is going to fail. That's valid to think that way, right? We've been taught to understand if price fails to break the high that it came from, well, if it fails to break the high that it's retracing towards, right? In this case, you will see that it didn't get above this level. It didn't close a body, or even this one. This is an internal one, right? This high led to this low breaking up underneath this one. You probably say, oh, well, it didn't close a body above here. It created equal highs. Chances are it might come take this level out first, induce it before coming up. That could be a valid way to think about it. So in that case, you avoided the stop loss of trying to sell or the trying to buy. So you waited. So price did all this move here. And at 11, still within your kill time window, I cut mines off at 11, but I know we come from trading till 12 anyways, which is still fine. You can still trade till 12. Price comes here and does this medium inducement. What am I looking for? This is when I drop down to like my 1 minute, etc. Because in this case, this is where you guys are only looking for your entry model. And if you want to be profitable in a sense of like have consistent TPs, just keep two entry models. Don't do too many. Two, three is too many in my eyes. Even though I know a bunch of them, I try to capitalize and focus on two and three myself. It's hard to unknow what you already know, so that's why it's kind of tough for me to avoid it. But if you can, try to just focus on two. So here we go. I'm on a 1 minute. Medium inducement happened right within my key time window. All I want to know is, was there a mitigation with the medium inducement? So while we were still on that 15 minute, before I jump to that one again, let me just give you clarity. While we're on the 15 minute, we can see this order block right here. I always shed light on I always emphasize, I'm sorry, the importance of having a mitigation with your medium inducement. It's like a trampoline. You know what I mean? It's the trampoline that's going to confirm the move for you. If the medium inducement happened, for example, look what happened here. The medium inducement happened before that big wick candle. The medium inducement happened on the first wick. This is how important the mitigation is. Look at this. The medium inducement happened here. This was the candle that did it. And you see this push to the downside where it didn't close a body? That's because there are something called those breakout traders who are expecting for price to immediately sell off the minute it took that previous day high. So when we go to that 1 minute, you're going to see the reaction that happened with it. Look at the reaction. So you can already imagine how many people was already looking to sell. When they see this wick and they see these bearish candles and they see price comes up here and they see a wick down like this pushing against it, people who trade, retail traders in most cases, they're already injecting sells in the market. Market entries, stop losses above here. They're shooting the market down only to be induced out for the real mitigation to happen. Now, in this case, now that you can see the clarity of your medium inducement leading into a mitigation, sometimes it's not always this simple where it just comes into a demand or supply as it's doing the mitigation. Sometimes the demand or supply is like, let me move this up. Sometimes the demand or supply is up, is right here, is above right here. And price does the medium inducement like this in these cases, right? Let's assume this one was the medium. Price does the medium inducement like this, and it does these moves right here. And everyone said, oh, high, low, high, low. And they're expecting for price to induce this and sell off, but price does this and it takes them up to then do the mitigation. What that leads to is new confusion because now they're saying high, oops, they're saying this high leads to this. And let's say the price action took them out like this to then mitigate. Now they're expecting these levels of discount to become the continuation. But what price ends up doing is mitigate, give us our entry, comes up, we enter, and then guess what? We come take them out. We give them a false reaction because now they think it's going to continue again. We induce this level, and the price continues again, even lower. These things happen time and time again. It's very important to understand how the market manipulates, how it traps, how it invites people in, and you always want to pay attention to which one is being presented. This week's price action, one of the things that, for example, I spoke with Manny, he brought it up, was that he noticed that this week it was more so tailored towards break and retest. Price was inviting and favoring a lot of break and retest traders. You can see it all throughout the market. You want to pay attention to whose market it is. Look at this. We can start from right above here. So this is how you get more clarity with knowing which liquidity is being invited. Look, who got this trade in here? High led to this low, caused this break. What did it do? Retest, break and retest traders are winning. Why? Because in their mind, this is their system. So if price always take them out, like you hear me always say, if price always takes them out when it invites them in, when are they going to make money? That means they will never trade again. That means that level of liquidity will no longer exist in the market because these people will see, okay, this is rigged. Same thing with trendline traders. Look, 1, 2, 3. If price does not continue to give them these false narratives, how in the world would they not continue to take these types of trades? It has to. Look at that. More break and retest. Look, break, retest. This high. Let me zoom in, my bad. Keep forgetting. This overall high right here led to this low internally, breaking under here. What happened? Price push back, retest, continue for the break and retest. Keep feeding them. And it did it again. Another invitation for them right here. You know what I mean? So these things are important that you pay attention to the types of liquidities that are entering the market, just as important as it is to see which ones are being exited. So definitely keep that in mind. So let's get back to the execution of something like this, right? When you see a context like this, you know you're trying to buy the market because you was in a bullish, you saw the previous day low get taken. And then you identified your dealing range and you realized you were still in a discounted level and you have not reached above 50% yet or 618. In that case, you still want buys, but what is your session presenting you? This is where the conditions come about, right? If you came into the sessions here and you took advantage of the buy, then guess what? You finish the narrative you were interested in because you were interested in buys. But if you came into the session, let's say you came in late, you didn't even see the lower time frame yet, you only saw the daily, you said you want to buy, but when you finally get down to the 15 minutes and the 5 minute, you see candles are right here already. What do you do? Do you say, okay, well, I'm going to wait for price to come back here and try to sell? I mean, try to buy from here now? Some of us do that. Some of us marry this analysis because we say we got to buy. So therefore, we ignore the fact that price did all this. And when the trade comes down here, we're waiting for price to come here and give us our trade. And then we get mitigated here and price just consolidates and then does all of this and then finally takes us out and then finally makes the move outside of our session. Why? Because we forget that when this happened, there's going to have to be a retracement. Because if this move right here, that when you open up your session, did not turn around and start coming to you, but instead it continued up towards these medium inducement levels, ignore the fact that you have to buy and say, I'm going to position myself for a counter, which means you're only going to catch a 1 or 3. Don't try to catch a home run. Even if this right here, all the way to here, was where you're going to buy, You can still have that bias in mind that when it comes here, I'm going to position for myself for a buy. If it's still within my key time window, I'll wait for confirmation, of course, if it's within my key time window. Why would you still position for that buy? If your mind is wondering, simply because you have not reached a premium level. You are still dealing in a discounted range. So you should not be trying to force a sell deeper until, like, if that's going to happen, go deeper, let price do it alone. You don't want to be a part of trying to force this because this is not a clear range for the market. Now, if it does create the break to the downside, that's fine. Even better for you because that's more context. What type of context? Because if it induced this level, you know you're going to for sure buy up again. If it breaks a body under this level, you still know that it's going to be a retracement for you to then sell continue down. So you never have to fight the market, just continue to adjust with it. Flow with the market. Now, let's close up this part. Now, you open up the session, it was here, but price did not come to your level. Instead, it came up here and gave you these medium inducements and this mitigation of a high time frame M15 supply. Now, all you want to do is look for your entry model. Now, let's go over our entry model, guys. Entry model is very simple. You want to find a two-leg protocol or a change of character, break of structure. It can come in different forms. You don't want to pick, you want to let the market show you. In this case, how would we identify this one? This one right here, we have this high led to, what's the lowest point? We'll say right here before the retracement start. This low. This is one leg right here. Boom. Then you have this low led to this high right here. And this high failed to break a body under this level, but instead it did a sweep. Is this confirmation for you to go ahead and sell if it's a sweep like this and not a body close? Typically, we want to see a body close 100%. But in this case, we didn't. What we got instead was an inducement. This is where you start using I wouldn't call it market IQ, but you start putting context together, asking yourself some serious questions. If the market just took two levels of previous day high, for one, gave me a high that led to a low, and the low failed to break above the high, but instead came down and induced it instead as a sweep. The next thing that the market has to do, in my mind, I'm saying is if it wants to continue down, because we had a mitigation after my medium inducements, I know that market should give me a retracement to at least, in my mind, I'm saying a retracement to at least 50% of this range right here, 50% at least, which would have been this level right here. We're going to mark it right here. We know we want to at least get to down this level, right? 50%. So if I'm here, market is up here for me, and I know I need to come at least this range, even though I know I wanted to buy from here, but I know it has to at least come to this range, and it could turn back around from here, then I'm going to tell myself the worst case scenario, that the market is printing, this form of a fake out, where most people will see this as a build up, inducement, one leg, two leg, and they will look to buy here. But how can this be a clear two leg to buy up? This is where sometimes you can see a two leg fake out. You'll see this inducement, one leg, retrace, two leg, it breaks. And guess what? Like we always say, we wait for the last low. Well, this will be the last low. We would have been positioned for this level to be induced. So price would have did all of this for you to see this and then come here to try to buy up, and it gives you a fake out and then takes you out. Because that's how two leg works. The market knows that you understand two leg. That's one. I'm going to mark it for you so you guys can follow along. Retrace. Anytime you see candles come back to at least 50% of a range, even if it's this minuscule, this small price action, you just grab your fib from the low to the high of it. What did it come in? Look at this, 618. It's in the 618 discount level of that move, of that price, that small price action. So yes, this is considered a retracement. So price did that push, retrace, push. This is a form of a two leg. One of us, I think it was Azad, I don't remember exactly whom. When you had the two leg, you missed your two leg this week because you positioned yourself for a change of character break of structure, but you wanted to do two leg. This is what your two leg would look like. When it does the high, low, high, what you're waiting for is the last low that led to the high that caused your change of character. This will make it more clear for you. The change of character. You don't wait for a break of structure for two legs. If the market gives you a break of structure without a mitigation of a supply, then yes, you can continue to take the buy in this case. But if it hasn't given you a break of structure, or if it does give you a break of structure, mitigate the supply, that invalidates your buy. So in this case, you would be positioning waiting for this inducement for you to then position for a buy like in these types of levels. In this case, look what the market did. It knows that we understand what a real two leg looks like. So therefore, it gives you that fake reaction. It has to invite traders who trade this system. But that's why I say, when you understand what your traps look like, you can avoid it. So what did the market do? Invite you in and then say, all right, I'm taking all of you out. Now, how would we have gotten into this sell? It's the same thing, but in reverse on the other side. You would have positioned yourself for the sell, even though your bias was to buy, simply because you understood the context. You're still favoring your buy internal pro trend. You're still favoring the buy because you did not reach that premium level yet of the last 4 hour swing. That high on the 4 hour that led to that low that took those previous day levels, that's confirming the major inducement that lets us know there has to be a retracement, and you use your fib tool and you realize you haven't gotten to 50% or 618 yet, so you're still leaning towards buys on the trend that should be going for the next day or the next couple days, depending on how the market moves, until you reach those premium levels, right? So seeing that, and you see that the market does this medium inducement and mitigation, you understand that this is the retracement that's going to probably happen to a level like this, and then the bias of the buys to continue again, where the market should be looking to continue where? Towards the inducement of this level to reach 50%, right? Because we know it can leave from 50%. So inducement of this level to leave, because this will be a medium inducement or a major, because this will be a previous week's high at this point going into next week, right? So this could leave from here, or it could simply push to the 618 because there might be a supply or something in here that can cause it to reverse. All right. So, but the reversal, we don't need to predict if the reversal is going to be all the way down here. That's not your job. You just need to capitalize to the next level of liquidity. So I'm just giving you sauce that's just going to give you consistent TPs. You don't always have to look for the swing anymore. Despite me used to do 1 to 3, 1 to 10, I've learned that my system, I have a higher consistency rate of catching trades when I was focused on 1 to 3, 1 to 5. I noticed that in my system. 1 to 3, 1 to 5, I hit TP 9 out of 10 times, right? So therefore, I take those. So let's go into the trade. I know I've said that about 3 times. Let's get into the setup. So you see how I kept all of these contexts in my mind. I'm reading the market because I'm reading the language of what it's telling you. The market already told you all the things you need to know from the daily. And then the 4 hour gave you context of where you're at in the market. And then the 15-minute gave you context of your condition, which is your session of that moment you're coming into. And then your 1 minute is giving you your execution model. So our condition bringing us here at 11. We missed the morning run. Of course, I'm going to look for the inducement of this one to sell off. Why? Because the context, the fact that price, you've taken 2 levels of medium inducement. You can't just continue bullish straight to the premium. That's not realistic. You have to retrace somehow. You've just done a break of structure of this level, this low leading to this high, breaking this level here, and then did the inducement and a mitigation. I know you need to retrace. And this is the reason why I would still sell, even when it looks complicated like this, where it's like, okay, wait, how do I know? Because it didn't close the body. I waited, and you would have waited for it to do it here. You finally see the body closing. You would say, okay, I'm gonna wait for him to come get me here, or inducement of this, and price never came. And you'd be like, oh, I got left out. The reason so is it still gave you your setup. So here we go. High, low. That's the first leg. One leg to the downside. Retrace. Remember what I told you? When you get that retracement, look at where it came. Above 50%. Price does not need to go above this. The only thing it needs to do is either induce it or it can leave from here. 50%. And look, it induced into 618 anyways. So let's carry on. One leg, push down. 2 legs. Inducement of the 2 leg puts us in a question mark type of thinking. Nobody. But guess what? It does this internal liquidity starts to get built. So now we're seeing this as internal price action because you're now in these two dealing range. But because there was an inducement of this high, I'm now waiting for an inducement of either this high or this high. So if I'm positioning myself for the trade, I'm going to do what? If I'm taking it from this level right here, because there's a supply right here, if I'm gonna take it from this level, which 9 out of 10 times that's what I would have done, I would have taken it from this one simply because price created this internal high. If it would have just came back, if price would have just after this inducement started doing this and then just kept going like this, then yes, I would have waited for this inducement. I would have positioned my tool up here. I would have taken it just like this, waited for it up here, right? Maybe there was a 2 minute or a 3 minute order block somewhere up there. Maybe, I'm not sure, but I would have found something within 7 pip range to take it. But the fact that price created this internal one, I don't need to see this one induced, but it can take it. But in my mind, I would say I don't need to see that one induced because it has already reached 50%. But here's how I take the trade in this case, right? That way you still end up being in a trade. I would have positioned myself right here, put my tool, expecting for this to be the inducement, and I would have still took my sell and I would have had my stop loss. Well, I would have my entry right here because I want to see this induced. So there's no point of taking your entry and you have your stop loss like hugging this wick, but then your entry is underneath the level you want to see induce. It makes no sense to do that. You want to see this level induce. So I don't want to get in from here. I want to get in above it like this. So if I'm going to get in above this, is a 1 pip stop loss realistic? Heck no. That's very unrealistic. So what I would do just to give myself some breathing room, I would take at least 50% of this one. Even this wick right here, this one right here, this one level here, I would still take it. And to make it even more clear, like give you more confirmation, you could have just did this with your fib tool, see the lowest range and say, you know what, I'm not going to put it no higher than a 618. And you would have still been in that trade to sell. Now, where am I selling to? We talked about it, just to 50% right here. And this is a 1 of 6. You know where I would have gotten that out at? Because it's a counter. I'm out right here. That's all you need. You don't need all this extra run. And this is where you kind of can trip yourselves up, guys, because you're looking for more than you need to take. Of course, look at all this money we left on the table. But what's more important? The fact that you understood what the market was telling you and you knew how to position yourself and you walked away with 1 or 3 that you're comfortable with. You didn't have to. You could have done 1 or 3 partial and then one of the rest right here because you know it has to get to 50% anyways. So you could have easily done that. And chances are, yes, I would have done the same. I would have at least kept it to the 50%. I would not have targeted this demand, even though price reached it. As you see, even though price reached it, I would not have targeted it simply because I understand once it reached 50%, it can turn around from here. And that's how I always get out of trades and leave the market alone. So that was a understanding breakdown of how to navigate going into New York. Same thing applies if the market was in a sell, right? Same thing applies. You simply just come into the market, and if it was on a daily, you come in there and price took a previous day high that we were talking about, like this one in this case. I'd come in and I say, okay, I'm looking for sell. Before I even see anything that's happening to the down time frame, I'm just seeing this happen here. This black candle's getting started. All right, I'm looking for sell. I go to the 4 hour. Okay, this low led to this high, broke above here. Price needs to retrace. I'm gonna pull out my fib tool. This low. It's literally that fast. That's how I literally find my position that fast. This position, okay, cool. 50% here. All right, we already there. 618's here. Okay, cool. What do we know about 50%? Jeremy always tells us if price leaves at 50%, it will come back and take induce it. It always does, right? So in this case, 50% is there. All right, cool. I'll go to 15-minute, see what was the 15-minute price action. 15-minute price action, what is it showing me? This high led to this low, broke underneath here, induce underneath here. We have retraced. Retrace where? To the premium level of it. What else would I be looking for? Sell. Because if I grab my fib tool, I'm back in the premium. So I'm not looking for nothing else but sell. And where did this sell bias come from? From right up here. Before I even saw what the lower time frame told me, just from the daily, I already knew I was going to be looking for a sell. So it's to that point that you want to be able to read it. Now, if you don't have any previous day high or previous day low taken, remember what I said in the beginning, this is where it can get tricky because now you don't have no trampoline, no injection of liquidity that's giving you a clear direction of what's about to happen. So now this is where you have to position yourself or wait, let confirmations come. but they'll give the market a chance to build liquidity because sometimes it has to build it as well. So these are the things you want to jump on. So let's close that part of the chapter in. I hope you guys got a good understanding a little bit of transitioning from London to New York. Another thing I would add to that, it won't be a breakdown, just kind of give you context, is the pre-session before New York, that opening session, right? That is at 8 a.m. Let me move this out of the way. I think, where is it? Yeah, around like 8 a.m. These are always going to be liquidity, right? So be careful with that because you could have fall for this. Let me flip the chart back. You could have fell for this, right? 8 a.m. Look what happened at 8 a.m. Price gave you a bearish BOS, inviting people to think the narrative that sellers are in control again. Remember what I said earlier? Because you've seen that these moves happen here and you see price fell to break this high. We're taught to understand if the high doesn't get broken, it's going to sell down to the back. It's going to reverse to the other end because now it has to come back to the originating point and take it out. So the market purposely give you this context: high, low, high, low. What happened here? Breakup structure. What happened here? Breakup structure. So now you're thinking, oh my goodness, we failed to break this high. We came down, we broke below the low that led to this high that broke above all of this range. We came down, we broke it to the downside, and we traced to where premium or premium level somehow, right? That's what it's giving you, this 50%. We retraced close to 50%, and the price caused another BOS. A lot of traders are not expecting to buy up to these levels. They're going to think that the market is going to sell. Smart money traders as well, because this is smart money concept right here. They're looking to sell right here. They're looking to sell right here as their decisional, and they're looking to sell right here as their extreme. Because they're going to tell you, yeah, this high led to this low, broke above, underneath all this. This is my decision. This is my extreme. This is how smart money traders get trapped. So you have to know who's hunting you. You have to know how you're being hunted. Otherwise, you're going to get taken out if you don't pay attention to how you're being hunted. So when you see these contexts, always remember higher time frame takes precedent. Ignore this noise. This is noise. Look when it happened during liquidity time at 8 a.m. 8 a.m., 6, all the time after 6. When London, if I trade London, I trade London from for me it's 3 a.m. For you guys, it's 8 a.m. So I trade London 2 hours. I trade London from 3 a.m. if I'm in a session from 3. Do I even go to 5? Sometimes. I usually do 3 to 4, but 3 to 5, I would trade London, right? When I'm in the session. If I don't see something, a setup or entry by 5, I'm done. Because 6 o'clock and after, price is just going to be building liquidity for New York. It's not going to give you no major moves. Very rare. You might find it, maybe another pair like NAS 100 or one of those indices. But Euro USD, GBP USD, the ones we trade, I haven't seen it that often. It's very seldom that you'll see it give you a move during these times, 6, 7, 8, which is for you guys 10, 11 before it gets to the New York time. It's very rare. It's going to be traps. Just like before New York session, you have Frankfurt. Frankfurt is a trap session. You know what I'm saying? Because even on Frankfurt, you're thinking this low led to this high is going to break structure, so therefore price should respect it. It did. It respected the first time. Because I always speak on this when it comes to Frankfurt, that if Frankfurt leads to something, it's going to be respected, right? It led to something. This low from Frankfurt led to this high, and it caused all these breaks. So when price came to it, of course, it gave a reaction. But the reaction wasn't to come take this high. It was simply to fulfill the retracement of the next trap that's going to get built. But we don't trade Frankfurt like that. But anyways, this is something you want to pay attention to. Watch how price falsely build the narrative during 8 a.m. before the opening of the session, because this was where you get taken out. If you forgot the context, which is what? This was the major inducement. This was the beginning of the move. BOS, price has already came down, swept this level. Oh, where's my tool? Gave you the previous, well, not previous, but gave you the minor inducement right here. This minor inducement, it was the fuel to push for the buy, and then it pushes out. You don't want to sell this because most people will say, oh, this inducement is going to retrace here, and then we sell off. So don't fall for that, all right? Any questions, guys, before we touch on anything else? Feel free to unmute yourselves. Let's clear this out. Not everybody at once. I'm just kidding.
So, can you hear me?
Yes, I can hear you.
How you doing? You okay?
Yeah, man, I'm doing good, brother.
Good, good, good. So basically, when you mentioned regarding the inducement and then it leads to a mitigation
Mhm.
of a say 15 minute or 5 minute, whatever. Obviously, depending on the time, do you then go for an aggressive entry or do you wait for a two-leg protocol or
Okay. I want, I want you to finish the question, or re-ask it with this. I want us to be very intentional with when we say inducement, there are many kinds.
Mhm.
Choose a specific kind. So that way you can
So
visually, yeah, which one?
the medium inducement.
Okay.
So when
So
I say medium inducement, yeah.
that disqualifies the 5 minute, right? Because the medium inducement don't
That's
happen
true.
on
Yeah, you're
five.
right. You're right. You're right.
See
Yeah,
why
yeah,
it's
yeah, yeah,
important.
yeah,
It's important to
yeah,
be
yeah.
intentional which the type of
Okay.
inducement context. Okay. So now,
So
go ahead with the question.
sorry, yeah, I was saying. So when it goes into a medium, because when it's I get confused. 'Cause sometimes I'll look at the 15 minute and then I'll see there's a OB or
Mhm.
an or POI, and then
Okay.
I go to a lower time frame, and then I obviously refrain. What's it called? I adjust my POI.
Okay.
So that's what I meant when I said that induces obviously, and it mitigates it does the medium inducement, but then it also mitigates into the same kind of same POI. I would say then, but I
Okay.
just
So
kind of
it's like there's
adjusted.
a medium inducement within your POI, a medium inducement level within your POI. Is that what you're saying?
So an inducement happens, and then it mitigates a POI. Yeah, yeah, like that's what.
Simultaneously. Okay. Yeah. So, all right, I'm following you. And the question is, how do you position yourself for the trade? Is that what
Yeah,
you're
so
saying?
do you go for an aggressive entry when that happens?
Ah,
But then I guess you answered the question because obviously the meeting just happens on the 15 minutes, so you'll have to kind of go
wait for
down in time frame.
confirmation. Or just
Uh,
use this tool right here. That's a good question. That's actually a really great question. You want to just in this case, because this is basically what happened here. Your question is exactly what happened here. So the question is, should we just the question he's asking guys is should we just take this trade right here aggressive since price has to reverse from here or some type of reaction from here and we're taking all these inducements? You can if you use your long range tool and you see how big it is. Now, it's 11 pips. Would you take it at 11 pips? You're giving up a lot of money if you do
Probably not.
that.
No.
Let's try to see what it looked like. And we're still going to try to target 50%. Look, it's a 1.9. You don't want to take this. That's
True.
that defeats your edge. You no longer have an edge against the market. You can catch three of these and win. And the one that you catch, I mean, you can catch three trades and hit stop loss. And the one trade you catch like this, it doesn't make nothing back for you
True.
because it was on 1.69. So that's why we wait for the confirmation of our two simple entry models, change of character, break of structure, or the two leg. Because then you get to catch what I showed you guys earlier. This small, like it's showing 2.5 pips, but really it was a much smaller zone. Why is it 2.5 pip? Because we're trying to be modest and say, okay, we're going to cover here, but we really could have covered the overall high, and it's still 5 pips. And you're still at a 1 to 3. Look at that. I didn't even have to move the position to a lower level. It's still at 1 to 3 just to get to the 50%, even covering this overall high. Why? Because we understand that because I would have said this has to be the inducement now, the minor inducement that needs
Mm.
to happen for the market to sell off because it didn't close a body here. So therefore, it needs to come take here. But the fact that it created internal structures to me to have new internal dealing range, I know that this now is no longer a threat, right? In my mind, this is becomes the liquidity that we need, this level and this level. And the fact that it didn't come take this level first, because if it would have came down and induced this level first, then I would have definitely said, okay, this is trend line. So now this whole thing might be taken, but it didn't take this level first. It didn't get more liquidity. So I said this one needs to be taken first, and I would have taken it. So to answer your question, yes, you don't want to take it aggressive unless it's less than you know, the size of your pip range is less than 7 pips. Now let's say you went to 5 minute and you say, okay, hey, look, there's a 5 minute order block here, Sauce. What if I would have said this one? And this one is um less than you know, less than the pip range. So let's see, how big is this level now? 5.7. There you go. This could have been your potential opportunity to enter the trade. Now, unless you're trading on on account that has raw spread, meaning the market is going to enter you at the tap of your entry, you could have been left because spread might have not tapped you in. Because some
Okay.
brokers, the spread might not get you in there. So unless you're trading a live account with raw spread or you're trading with a broker who gives you raw spread, you might have missed out on this trade. And you'd be like, damn, price left me. And you would have thought waiting for it to come back and do something else, it might have never came back. So these are the things you want to keep an eye out for. So this is the reason why I don't always position myself for aggressive entries unless that's my high time frame supply and it happens to be less than 7 pips, then yes, I'm gonna take it aggressive from there because it's a 15-minute supply and it's not more than 7 pips. I'm not gonna wait for confirmation. I'm just gonna take it from there. And if I do get confirmation, that's gonna be my second entry. You guys have seen me do it all the time where I enter two trades from one move is because I already saw that high time frame being within my pip range. So I took it. And then price ended up giving me confirmation, whether it's another two leg or give me change of character, break of structure without tapping into a supply. In most cases, even if it did tap into a supply, I would probably still continue to buy, not because that's an invalidation model. It's simply because that 15-minute inducement that price I took the aggressive entry on, that's already the first mitigation of a POI. So regardless of giving me confirmation of a change of character breakup structure, but it reaches another supply, and if it's not a high time frame supply, I know that that other supply is going to be an early buyer or an early seller invitation to draw them in, induce a level. Most likely is going to be the low that led to the mitigation of that invitation. They're going to get induced out to flip their bias because now they're going to be expecting sales, and then price going
Mm.
to then turn around and take them out. You have to know how these manipulations happen. You have to see it because when you see it often and often, promise you, you will sit at the market and just watch people get taken out left and right, and you will know which one is for you, which one's not for you. You feel me?
Nah,
Hope
hey,
question,
just
man.
sorry.
Yeah,
Appreciate it. Can you just go back to when you show that wick up to the downside, that little
this
minor
one,
inducement. Yeah, you
this
see
one
that
here.
minor inducement. Yeah.
Okay.
Um, I'm a bit confused. Explain as to why you understood that to be okay. Cool. We're still bullish. Sorry, we're still bearish.
Yeah, good question. Easy. You go to the 5 minute real quick, right?
Mm.
5 minutes is good for internal structures. You go to the five. You could have went to the 15 too, but in this case, I'll go to the five so you can see the candles more closer. You grab your fib tool from this low to this high. Look where price is at. You mean to tell me you're going to do an inducement at 0.236 and you're going to buy up from here?
That makes sense.
That's crazy. But let's say
Makes sense.
you didn't read it from that context. Let's go another level of it, right? Let's say you grab your highlighter tool. You have low, internal, you got high, right? We broke above this one. Price fell to retrace. Did this even come to this dealing range? Look at this. You didn't even come to 50% yet.
Mm,
Look at all these unfulfilled levels. And you want me to
yeah.
believe that after you've taken two levels of medium inducement and mitigated a supply, that you're gonna fake me out right here to buy up? That makes no
Nah.
sense, especially when all session you've just been buying the whole morning of the session. You have to understand the language of the market. All you need to know is medium inducements, major inducements leads to reversals. Price has to react. It has to react. If it happened, there was no mitigation, then I can believe this can lead to something. This inducement could lead to the mitigation for the real sell to happen. Yes. But because the
Okay.
mitigation already happened, I'm not falling for this.
But regardless, even so, because obviously, like you just mentioned, if it didn't mitigate, you'd expect it to mitigate, but it's still your bias will still be bearish
100%.
because
And
of
I
that.
would, I
Obviously,
would wait for
medium
the
dude.
mitigation though. Remember,
Yeah, you
if the
still wait for
mitigation was up
mitigation, of course.
here,
Yeah,
if the mitigation was up here and this inducement happened, then I would
yeah.
wait. I would wait for price to come mitigate here before I look for the sell. And if
Okay,
price
and then
still does this move and leaves me, I'd just say, okay, you left me. I'd be okay with it. Simply because I don't see that you hit the trampoline. You didn't get the real inducement. So in this case, that means that price is gonna come fail this level. So I'd be even more happy because remember, my bias coming in was buy anyways. So the fact that you came short of this level, this becomes now a potential smart money trap. This right here becomes
mm,
a smart money trap because what's gonna happen is I'm gonna come back to here, mitigate here, get all the liquidity I need and build my way up here to go invite people in here and then take
Well,
it up.
got you. Got you. Appreciate it, man. Thank you.
For sure, bro. Anyone else?
Sauce.
Hey,
Oh,
who am I speaking with? Let's let the lady go first.
Oh,
okay,
it's
okay,
Naylor
okay.
speaking. But
How's it going?
if somebody wanted to go before me, I don't mind.
It's okay. We're gentlemen's, right? They'll let you go first. Go ahead.
Sorry if I spoke over you, whoever that was. Um, Thank you so much for that breakdown, by the way. Like, it's so interesting because I took a buy from New York.
Hmm.
What time was it today? Um, I entered a buy at 2 o'clock, 2:06, right? And I actually didn't mark up that 15 minute.
New
So
York.
yeah, today. I can share
Yesterday?
my screen if it's easier.
Yeah, yeah, go for it. Share the screen.
Share the screen.
Yes.
Look, forgive me because I'm a
All right,
bit
let me stop
tired
sharing. Hold on.
today.
Go ahead.
So if I confuse my words, it's because it's quite late at night here.
It's okay.
Okay, my chart visible?
Um, I think it's loading, at least on my side. Did you already click share?
We can see it.
Mm-hmm.
We can see it.
Oh, yep. I see it. It's coming up right now. Yep.
Yeah,
All right, cool. I'm
amazing.
with you.
So okay, so the reason um I so yeah, my question really is I'll explain why I took this buy firstly, and you can tell me if it's valid or not valid. But um I didn't actually mark this zone, and it's interesting you marked that zone, but
Hmm.
I'll touch on that in a moment. But the reason why I took this buy today was because we came from what I would have considered like a high probability 15-minute POI, which got tapped in yesterday, which is where I took the sell
Hmm.
to. So I know that that zone was already mitigated, but then, and I think, yeah, that's like quite premium levels. Don't want to go too far back. Um, but essentially that then created that previous daily low. And then I started to see all these sweeps and inducements happening here at the bottom end. And I thought, oh, actually, there might be some reversal happening well, there might be some reaction happening from this 15 minutes. It
Hmm.
hasn't fully um, completed its purpose. I didn't feel. So when I went onto the charts this morning, then I saw this move in London, and we had the chalk there, and it retraced back. I marked this zone,
Mm.
right?
Yep.
And that zone did tap into before my kill time window. But what I did see was I saw these sweeps here. And I
Hmm.
know this is something that we always stress about is although this 15-minute demand has already been mitigated, it
Hmm.
didn't give that push that it didn't really retrace all the way up to 70, well, premium levels from the swing high that you showed us earlier here from this Asia. So I still felt it had more room to go up, right? Which is why I'm at that 78% level there.
Hmm.
Now, so I entered that, and
Hmm.
although you can see if I actually clear on the 1 minute, so that I entered that, and yes, it did mitigate it in the kill time before kill time window, which is I can't see because this little border is in the way. Um, yeah, around 145. Now, I don't want to like I've noticed something within the charts where like if zones always get mitigated like 10, 15 minutes before kill time window,
Hmm.
and generally they give off a really good reaction. So I didn't want to completely write this off.
Hmm.
And so I thought, oh, let me take this buy anyway, and let me cover those sweep lows. I actually had my stop loss a little bit lower than this, but
Hmm.
because my lot size was incorrect, it was like I used a bigger lot size.
Okay.
I just re yeah, just remodified it at the end. It did play out in my favor, and that's fine. But I don't I don't necessarily think that's a really clean setup, I would say. But my question, which touches on your 50-minute zone, see, I mark this as a trend line. Now I'm wondering whether or not this is because I initially thought it would still need to go up to that 78% level. And I was intending to go up a little bit higher than this because, like you said earlier, we are bullish. Um, but then I was satisfied with the London high as
Mhm,
a point of liquidity to exit the trade. Now, when it comes to marking zone
mhm,
within a trend line,
mhm,
that's probably why I would have written it off. But now that you've marked that as a valid zone,
mhm,
I'd start paying more attention to it. But I guess my question, in a
mhm,
really sorry about this, in a really long roundabout way, is was this valid? And was this a valid trade? Should I have taken it or should I have not have taken it? And
mhm.
secondly,
Mhm,
zones within trend lines, are
mhm.
they effective? Because I was always under the impression that no, they need to be taken out.
Okay.
Slash, is this trend line even a trend line? There's many questions in there for you, source.
Yeah, no, I get
It's
it. And
quite late at night
no,
to
you're
phrase it
good.
properly.
You're fine. It's a really good question. As far as let's tackle the trade first. Zoom into
Mhm.
the trade, right? While you're on the 1 minute, go all the way into it, right? Let's see the 1 minute. Yep, all the way to the inside. Boom. Okay.
Entry.
So
Mm,
the entry itself was risky.
mm,
It worked in your favor. Cool. You don't want to make a practice of it. Why? Because this was a Frankfurt low, though it did lead to something, right? Which is the from a London session you saw it led to the BOS, yes. But remember,
mhm.
it already got revisited. So
Yeah.
this became a support and resistance level. So that's why price induced it. See, the price took the whole level out. Now, on a 1 minute, it doesn't look like a support and resistance, but I'm sure if you go to the 5 or 15 minute, you will see that there was a demand, a 5 or 15 minute demand that was created out of that Frankfurt. And if you mark the entire body of it, then you would be able to say, okay, yeah, this was let me see, you can zoom into the 5 and try 15 minute. I think it's more of a higher time frame. All right, perfect. Right now, you see the 15 minute bearish and yep, bullish engulfing. Right. So if you put
Yeah.
that, let's use your move it up to it. What does that look like? How many times has price visited that range?
Yeah.
You get me?
Yeah.
So
Yeah.
that's why I say it was risky.
Got you.
Anytime you see a zone like this get tapped in like this, automatically mark it as support and resistance so that you can avoid um taking those trades. Now, granted, the inducement, if you wanted to say I wanted to wait for the inducement because I know a buy was supposed to happen, but I wanted to wait for the inducement. Let's go back to the 1 minute quickly. You would say, let me see if price gave you an entry. This would have been what I would have looked at, right? Did price give you an
Mhm.
entry? I don't think it gave a clear entry, even though it started building a two leg after the inducement, right? Let's zoom in. Let's make the candles taller. I mean, you can, yeah, taller now. Yeah, perfect. So let's go. We have one leg. Well, it will
Into
start.
this.
It will start. Okay, yeah, you can start from the inducement level, from the lowest point. So let's grab your highlighter tool, I guess. If we could just, yeah, just click and drag the one leg to the first retracement, push up, one leg, retracement to the candle to the wet before the sweep. Did it sweep
Right
down?
before.
Keep going down, keep going. Yep, that one. Because that one doesn't look like it swept the one to the left, did it? Or it didn't?
Yeah, it did.
It did.
Oh,
Okay.
did it?
Cool. If it did,
Yeah,
because I
I'm on.
can't really see. If it did, okay, perfect. So Control Z, you can remove that first leg because that wouldn't be the first leg anymore. It would actually be the one that swept would be the first leg. So to the downside, the bottom one, the lowest point. Yep, that would be your
This
first to the right because that one got
to the
swept.
right.
Yeah, so it will
Yeah.
be that one. So that also would be the first leg push up. Okay, where's the retracement? Fell to come to even 50%. It pushes up
Hmm.
again. Now you've got a confirmed two leg. So you would have been waiting for which low to be swept for the real entry, right? And then you would have waited for
Hmm.
where would be your entry zone.
Oh,
Mm,
wait, my entry zone here.
Yep, that would be your entry zone. You would want to see that level get induced for price to tap you in here and then push you up. But
Yeah.
what did the market do? Right, you would have looked for
It
that,
didn't.
but it stopped there. So
Yeah.
in that case, that's the market letting you know that this trade setup is not for this move. That's not the
Mm,
move for you. That's why I say when I say you guys have to know your setups. This is what your setup was supposed to look like. This would have been
mm,
your trade that you could have taken with calmness because it gave it to you exactly as such. Because look where when it created the second high, look where it reached. Look to
this
the left.
high.
Look to the left. What is that? That's no man's land. That's in the middle of
Oh,
nowhere.
yeah.
It's nothing significant,
Yeah.
right? So
Hmm.
that part right there, you understand when the retracement would have happened to your level, all the reasons why you could say, okay, I'm gonna take that buy to target those trend lines right there. So that would have been the context. Because price didn't give you that, you would have just ended up catching the sell after that level where you TP'd from, for example. That would have been the condition for your
Mm.
session today. But granted, you caught this one. Hooray, hurrah. But you don't want to make a habit of something like this. Always look to
Mm.
the left to see the context of the demand you're entering. Make sure it's not something that's been revisited too many times. Even if you see yourself
Mm.
having the ability to resize it, and you say, oh, there's a 1 minute demand though that didn't get mitigated. If that 1 minute is still within that big old 15-minute level, that's still part of the support and resistance.
Mm.
Yes, the market might react from it, but you don't want to trade it. It's too risky. This could happen. It can just get induced just like this one. And then you fall
Yeah.
under the victim of. So good job at least on TPing at the right liquidity level, either above the trend line or at that London high where you did. That's good. Now, as far as the question on the trend lines and the zones within trend line, now this 15-minute marker that I put that I showed you where the medium inducement happened and the mitigation happened at, that's
Mm.
not to say that this 15-minute is valid for a big move. It's just valid for this retracement.
Mm. Because it
Yes, it needs
reacted
to
from.
fall. It needs to fail 100%. Of course, it needs to fail, but it still has to give some sort of a reaction because most people who are selling from here, they're not selling to just where we're selling to TP at. They're looking to target to the lower level, trying to make the next low to the downside. You know what I mean? So
Hmm.
in these cases, what you want to ask yourself, if you find yourself looking at a supply or demand that is within a trend line, what you want to ask yourself is what level of liquidity is resting on like before that supply or demand. If you have, in this case, medium inducement levels, you will get a reaction from it. If
Mm.
you don't have medium inducement levels, it's just like, let's say it's nothing. It's just price basic candles. In that case, you can see price comes into it, possibly consolidate in that range and then take the zone out. Or sometimes price will consolidate before it mitigates it and aggressively takes it out,
Hmm.
because there's no liquidity for price to take beforehand while mitigating it. That's going to force it to the downside. You know what I mean? I said this thing about Red Bull before in one of our calls. These medium inducements considered like the New York and London. That's 2 cans of Red Bull the price just drank. And then it mitigated the supply, and the supply is like a factory of Red Bull. So now it just had a surplus of Red Bull. It has to give a reaction. It has to burn it out. It has to react the opposite way before it comes take that level out. Because why would it come take that level out? We haven't reached the premium level that you marked above yet, the 786 50%. Okay.
Got it.
But your job
Yeah.
is not to try to tie your understanding to this 786. You just want to capitalize on the move of your day. Every day your bias resets. Let your
Sorry, say
bias
that
reset
again.
every day. I say your job isn't to try to marry the narrative up
Yeah.
until 78, like for the rest of the week. Every day you reset your bias. Reset
Mm.
meaning you want the market to reconvince you that it's still pushing towards that way. Because
Mm.
if it comes down, for example, from here and decides to break to the downside, you don't want to confuse yourself and say, oh man,
Yeah.
the market is doing something completely new now. No, it just built liquidity. Because now if it comes down and break to the downside instead, most people are going to try to do what? Sell at that level because they're going to consider it an extreme. But because that
Mm.
level never even reached the 50% either, that's going to also become a level of liquidity that's going to get taken. So I understand price has to build liquidity. So when these things happen, don't fall for the idea that it's doing something I don't understand. No, it just built liquidity. That's all.
Amazing. Yeah.
Good.
Understood. Thank you. Hmm.
You're
Yeah.
welcome.
I didn't want to keep you too long. I did have another trade I wanted to go through with you, but that we can do that for another session. If you
Sure.
don't
I mean,
mind.
if it's quick, go
Yeah.
ahead. I don't know who else has a question, but if it's quick, go ahead. I don't mind.
Yeah. Sure.
Yeah, unless the community has a
Okay.
problem with it, I don't think no one does. So let's get to it. You got it.
Awesome. Yeah, we're all learning. We're all learning from Layla's mistakes. Right. Okay. So this one, this one really annoyed me. So what, I'll give you some context. So, um, in terms of analytical context, where were we? What did I see? Okay, yeah. So we saw I was in premium levels from this. This was my range, my dealing range from this high to this low.
Okay.
We reacted off 1 hour demand here.
Okay.
Um, but then this is the 15 minutes supply that we saw.
Mm-hmm.
Now, right, I wanted to sell down, okay, and I wanted to sell down. I wanted to sell down to a weekly. This red line here was a weekly low,
Mm-hmm.
right? I mark the weekly lows because I feel that price is going to at some point gravitate to it. Now, granted, my first entry here was my decisional that failed.
Mm-hmm.
So you can go through, but let me just make this a little bit bigger for you because there was a sweep. All right, yeah. So this was the 15-minute supply. Within that 15 minute, I found this 1 minute
Mm-hmm.
um OB.
Mm-hmm.
Now, this zone was obviously quite large,
Mm-hmm.
and I wasn't confident to enter this trade, but there was something don't I don't know. I was repeatedly going for this trade.
Mm-hmm.
Um, now I'm zooming. It does look a little bit messy because I've got overlapping trades here, but I still haven't journaled these, so I do need to keep them on.
Mm-hmm.
Now, what happened? What did I see? I saw the sweep here at this point
That 1 minute
on
level.
that level from this little wick.
Mm-hmm.
Saw it sweep, and I thought, oh, okay, I see a rejection happening.
Mm-hmm.
Let me get in on this trade. Um, and I think it was an early entry. I got wicked out. This was the trade I'm talking about. I got wicked out, which is fine.
Mm-hmm.
Um, now I did see a break of structure happening here, and I
Okay.
did go in again at this
Mm-hmm.
point. Was it at this point? Yeah. In any case, I got wicked out of this one as well.
Mm-hmm.
Now, it's similar to what you were saying earlier with your 15-minute zone, in that you can refine it to a degree, but then it's a case of getting that confirmation
Mm-hmm.
to get to that chalk. Now, I was not the only one on this trade. Myself and a couple of other girls were also in this trade. So we had quite a few brains in one, but now looking back at it and when I'm going to journal it, I can definitely see my mistakes happening here because I don't think I had full confirmation. But it still did. Um, I think I think I had more confidence in the bias or the direction, but not necessarily in the entry.
Do me a favor. Go to 15 minute real quick from there.
Yeah, this was it.
Is it right here?
Yeah, this is it.
Okay. Now, price came into that level. Question you want
Yeah.
to ask yourself is, you looking for a sell? And based on the way you put your TP levels, you were trying to sell to create a next leg to the downside, right? Um, Now the question you want to ask yourself is, if you need to come create a new leg to the downside, that would be I wouldn't call it a reversal, but you would need some sort of strength in your liquidity that you had to take. In this case, I can see where it could have tricked you, right? You took some trend lines and you took a smart money trap out. So it's easy to
Mm,
say, okay, we've taken trend line, we took a smart money trap out, and then price does this minor inducement of a 1 minute supply that was inside of your overall 15-minute supply.
mhm,
And this is where the context come back to, you guys will have a better experience in the market if you allow your levels, such as your 15 minutes, your 1 hour POIs, you allow them to be your guide. Let the market
mm.
react from them and give you confirmation. Because if this case, let's jump back to the
Yeah,
1 minute.
1 minute. Yeah.
Yeah. That minor inducement was not enough liquidity for the market to turn. And I think it's to the left, no? All right. On one of them sides. Oh, it's right here. Yep. Go closer now, please. So you can see that that little sweep that we've had, the first one, the one that it took you out from, that wasn't
Hmm.
enough. So in this case, you always want to see, and you never want to take it aggressively after the sweep. That's very risky too. All right. So try not to practice doing that. I mean, yes, you can, and it's probably your data will tell you. When you review and you do your journaling, you'll see how many trades have you hit TP with consistently, where it was
Mm.
just like this. The inducement happened, you just took it aggressively with the inducement. It's a very rare case. But in this case, if let's say you wanted to wait for that confirmation, let's start with the first inducement before you got taken out. You want to see that high inducement happen, the first inducement happen, right? To the left, right there, boom. Price push to the downside. Cool. That's one leg. You're getting excited. This could be the move. Price pushes to
Mhm.
the top side, right? What before it reaches that high, the internal one. Boom. You're like, okay, it fell to break the second. It fell to break the high. So now all I need to see it do is what? Break to the downside. Did it do that?
Mm-mm. No.
That means you was too early. You didn't even let the
Yeah.
move, the setup come in yet. So because you jumped in early, before that blow got broken, what did price do? Take you out.
Took me
Now you're a
out.
little on the fence. You're like, maybe it's not ready. But look how tricky the next time. What did the next move does? The next move decides to break to the downside. But what was
Yeah.
that? What was that move? A sweep of what? The
Super
low?
liquid.
Nope, not that one. The
Oh,
one
this one.
that was the one that invited you in. Because remember, after the push to the downside, that retracement was the invitation of sellers, more sellers. So now it came, induced them out, and then does the push out to the swing to sweep the other side. All price was doing in this area was just ranging, building liquidity,
Validated.
building people into the range. Now,
Yeah.
where has your setup come in? Nothing yet. So now let's say from where you're at right there, that low right there where you're at,
Yeah.
right? That one pushed up again. That became your highest point. And the price pushed to the downside. One leg. Well, it would actually be internal because at this point it will be
Uh-huh.
that one, yeah. Because that
Yeah.
one and then it gave you that slight retracement. But in this case, let's be consistent, right? Let's try to be consistent. In this case, would I have seen something like this and say, oh yeah, this is gonna be one leg, two leg for me to trade it after prices building all this consolidation? Not really. Simply because now I would see the high of the consolidation got taken, the low has finally gotten taken. I would have positioned myself between the imbalance. You see that imbalance right there? Yeah, I would have waited for that and covered that overall high. But what did price do? It never came in there, did it? Let me see to the right.
It did actually.
It,
Well, it came in Asia.
yeah, but
Oh
look,
no, it
that's
didn't.
a
It
whole
would have
nother
taken
session.
you out.
So within the day, within your trading session, it never did. So guess what?
No, it didn't.
I just would have not caught that trade because price left me. These
Mm.
are how you avoid stop losses because you have
Yeah.
standards for your trades. You know what it has to look like. And if it doesn't look like that, I'm not putting no money in because you did not look exactly what I need you to look like. That's what you always got to tell the market. Don't let it FOMO you into a trade simply because it made it look like it's ready. It has to show
Mm.
you with context. The move has to look like what you practice. The two leg protocol has to look like what you practice. It has to be one leg, retrace, fell to break the first leg, push out again, create another leg, which is now considered your change of character. And the low that pushed to create a change of character, you want to see that one induced. If that doesn't get induced and price says it comes down, respects a level into it, pushes up again, but doesn't create break another body to create another BOS instead it just does an inducement. Now that internal low becomes the one you want to see induced because then it can respect the change of character level. It's kind of how you always want to see it happen. If it doesn't look like that, just let price go. It just
Yeah.
didn't give you a clear setup.
Yeah.
Okay? Of
Yeah, I appreciate that.
course, of course. Thank you, Naila,
Thank
for the
you.
questions. Yeah, of course. Let me see. I think I have some questions in the chat. Yes, Zam, yes, it's gonna be uploaded on YouTube. What's the in UK? Oh, this is looks like we're good. All right. Anybody has have another question? Let's do like one more, or if we
Yeah.
can do one question, if we could keep it to one question, then maybe we can do
Eh,
like two, three more. So that way I gotta leave in like less than an hour. Let's do it.
okay.
Uh, How's it going,
Okay.
Brian?
Hello there, my boy Sus.
Yes. What's going on, Brian? How you doing?
I'm good, bro.
Yes.
So I wanted first of all
Uh-huh.
you to tell me how would you approach the London session today because I was a little bit conflicted.
Okay. London session today.
Yes.
Let me go to it real quick. Share my screen now. Boom, boom, boom. Let's clear the chart. London session today. So boom. I'll jump to the daily. Actually, no, I'll just go to the four because we're talking about London. So let me just jump to the hourly. We already know the context. All right, so let's move all of this out of our way. All right, so London's coming in right here. Asia, London. All right, cool. So let's just keep it right here. Let's see what the London showed you. Okay, so Asia did this minor inducement. Boom,
Mm.
right here. Asia gave you this minor inducement here. This minor inducement gave you one leg, retrace, pushed out, gave you this BOS. before London
Yeah.
came, right? Because this happened right here. So as your London is opening at 3 a.m., which is 8 a.m. for you,
Mm.
on the 15-minute, you have just caused a break of structure of this last high that led to this low that broke underneath this one, because this was the low that led to this high that broke above. Well, before it broke above here, it induced here, but it broke above this one. Okay. So
Yeah.
price came in and took that level out. Cool. So now we understand that was the context. So I had a BOS. Now, what did this BOS reach to? It reached this London high. I mean, this New York high. This New York high is a previous day New York level. It's not a 15-minute level. It's simply a previous day
Yeah.
level. And the fact is,
Yeah.
price is already coming from a major inducement when it took this level here
Yeah.
on a daily.
Yeah.
This is the context I'm reading it
Mm.
with, right? Coming into London. I'm already seeing,
Yeah.
hold on, wait, that wasn't the right one. This actually was, never mind. Yes. Price came off this major inducement from the previous day when New York took it. Reaction, we want to see what did it bounce off of, for example. We can see that there's this 15-minute demand right here. Boom. 15-minute demand. You move it to the right. You can see that price has been in this area many times, but this is a big demand, just like we were looking at from the last example Naylor show. So you shrink it to the downside because you want to see this get induced because this is now considered a medium
Mm.
inducement. It's a London low, right? So you're still in this demand. You're still within this demand because it was a low that led to a high that caused a break of structure. So it's still a significant level. And price is still going to fail it, yes, but it still has to give a reaction to it because there's a lot of liquidity resting in it. So it's not just going to
Yeah.
through because why it's not just going to push through it because there's levels of medium inducements resting above it. If there wasn't any, then chances are you could have seen it get blown through. But because there is, the reaction has to happen. So coming into that London, having that context, we know that we're coming from a demand that did not fail. This is automatically invalidation. So price coming into here, I just know this is an invitation. Why? Because we not only have we not reached the premium level of this swing, right? This was the last high. Well, we don't even have to use this one. We could even say the internal one, as a matter of fact, because this is considered a high that led to this low. And why would I even consider this one? Because if you look at this swing from this high to this low, price went to 618 already, or 50%, I mean. It went to 50%. So this is enough for price doesn't have to come above it. Well, which it will, because it's 50%, so it will get induced. But in the price action of the move, it doesn't have to come into it there. This was previous day. But let's carry on. So in London, I did my fib tool from this high to this low. Where is this supply lie in? What range is this in? 50%. This is liquidity. It's in 50% level. If price has already, it comes to a 50% level right here, you will understand that this becomes liquidity. Why? Because you are in a new day. If this is going to sell, it has to take this previous day level. Asia already took this New York PM, and this New York PM wasn't enough to even close a body. This is happening before your session. Price gave you this move, push to the upside, break above this Asia, and then mitigates here. If I was gonna sell, you could have sold, but understanding that this will fail. Okay, I'm still gonna position myself, but this is London we're talking, so I'm gonna focus as if I'm trading London.
Mm.
So let's go to from this 15
Mm.
minute price comes into this level in my kill time window. I'll go to the 5 minute. I'll look at the 1 minute after, actually. I wouldn't even go to the 5 from the 15. Once it mitigate, I'll just go to the 1 minute. All right, cool. So I have one price push lower, failed to come to a premium or discount level right here, 0.3. It didn't come to 50%, didn't come to 618. This would have been where I would have looked to continue to buy anyways if I knew that this needs to fail because price had already mitigated this level, right? We know price had already mitigated this demand. So I know that this needs to fail. So I would have been wanting to see price come to here for me to buy up. But would I wait for it here? No, because I already see this happening here. Instead, I would have wanted to see price push up here, fail to tap here. Even if it did tap here like this, I would want to see this come back, not for price to do this and then push up again. In that case, I know that this is going to fail because we've gone deeper into the level, took more liquidity, and now we're going to retrace to this position. So how do I find my entry? During London, price pushed up one leg into here, pushed out, fell to retrace, pushed out again, created a break of structure. Then it just gave you this push to the downside. So now you got your first 1 minute change of character. This becomes your chalk. Granted, yes, you could have said this one here, this little internal price action, high, low, high, because this did retrace to from this price action, it did retrace to a 50% level, but I wouldn't trade. That's why I said earlier, let's try to be consistent, right? So I won't try to teach you or talk about intricate price actions because that's going to confuse you guys. So let's focus on the clear ones. So in this case here, what do we have? This will be our change of character. Why? Because yes, it's a lot of wicks, but if you literally zoom in, you can see the body close. The body close right here. Price close the body. So that's a change of character. Cool. So I know I got my change of character. Now what I want to wait for is a break of structure because there's no opportunity for a two leg because a two leg would have happened closer. So if price do a two leg here, that would be a big looking two leg. And that's an obvious zone. So most people would already see, oh yeah, this is a two leg protocol. So what instead I would wait for is a break of structure. So what happened? Price came here, did not break structure, didn't even close the body. It didn't even induce it. It fell short of it. So I would wait. Price came up here now, did not close here. So now I'm looking like I'm in a consolidation range. The minute this got broken, now I can entertain a level like this, right? So if I'm going to entertain a level like this because of this BOS, because now this becomes your break of structure. Remember, we only have two entry models, two-leg protocol or change of character break of structure. So now you've got your next level of BOS. So now you've got this BOS and you got this 1 minute chalk. This is your setups. So now all you got to ask yourself is from this high to this low, price already came to 50%. It doesn't have to come above this right now. Okay, cool. Then you grab the next one, your tool again. From this high to this low, where's premium level? See it? So what I would say is, okay, well, I'm going to position myself from this here. I will cover the entire level. Why? Because this had an inducement of a buildup right here. It's equal highs. Price did this minor inducement and took this level right here, which led to the BOS. What makes it a strong inducement or a valid inducement? We always say this, if it leads to a BOS. If the inducement does not lead to a break of structure, it's not a true inducement. But this one led to a BOS. This would then know you can respect this level. So now let's say you want to enter the trade, but you are not sure if you are able to stick this right here. Bro, just cover the overall high, cover this one. And if you're not sure about this one because you said, well, that might be this. What about this demand here, sauce? I mean, supply here, sauce. What if price comes to this one instead? And this becomes the minor inducement because yes, it's 50%, but we always say that 50% levels get induced. All right, bro. Look, just cover the whole total. They'll cover the whole thing, man. Actually, you can go 50%. Do a full 1 to 7. If you really not sure, just max out your pip range. Just go to 1 to 7. And you can still target what? Your 1 to 3. In this case, you just go to 50% level. I don't really target beyond 50%. Look, because that was the low that led to the high that caused the BOS. Actually, we'll do this one because this one we trace to discount. So we'll do this one to here. 50% is right here. So where would I target? Can't even target 50% with this big pip stop loss. So we would have to target the imbalance. In this case, you'd have to target somewhere to these areas. So granted, no, I wouldn't even personally, if I had to really position myself to take this trade and make it this big of a stop loss, I wouldn't even take it, bro. I would just say, yo, I'm gonna take decisional, cover this one, and if this fell, I'll just take the second one right here and just call it a day. Versus trying to make it a big 7 pip and just to realize that I can even target 50% with that move. So I'll just do it right here. I'll target 50% right here. See, my 50% right here still gives me 1 to 3 because it's a counter because I understand the market's trying to buy. And if I was to take it right here and I put it over here, I'm still targeting what I wouldn't do 50% because at this point it wouldn't give you 1 to 3, but you could target the next level of liquidity, which in this case would be you got well this ranging area right here. You got price just range in this whole area, and it broke above the high, and it didn't take the low yet. So you would just target the bottom of this consolidation range, which is also an equal low, as you can see right here, relatively equal lows. So this could have been your TP target, targeting this next level of liquidity. So in cases you don't see two legs, just look for the change of character BOS because it may not give you the 2 leg proper. You might say 1 leg, retrace, 2 leg. Maybe you would have taken it here. Some of us would have. And if you did, that's fine. But in this case, I would have saw this intricacy and say, the fact that you already broke push in here, I know this level is supposed to fail. You could easily do this inducement here and push higher, but the fact that it closed the body got my attention. Retrace, fell to break. Hold on, I'm back on the fence again. It pushed up. It hasn't broken high, hasn't broken low. I'm on the fence because now I'm in between these two dealing range. You finally broke under. I'm back. I'm back interested. And then I'm gonna just use my fib tool from this high right here, because this was the last dealing range. Remember, it was this high. I mean, it was this internal and this internal. These were the dealing range. And price was just playing in between it right here, right? Until it finally decided to break it on this side. Now we know it's this one and this one. So I'm looking for the premium of this leg, this push. And it's right here. And if this would have failed, then we take this one. Got it? So that's how I would have taken this
Okay.
London trade. If I was trading London today and saw this situation, I would have taken it this way.
Now for me, I had everything almost the same as you, but on seeing that the highest point when the London session kicked in,
Mhm.
we did not see a medium inducement. You see, so I was expecting for a continuation to
You,
buy because
you said
from the
there was a
dealing
medium
range,
inducement?
I said we never had a medium inducement in the
Ah, okay.
London Open, as you
You
can
don't
see.
need one to
Yeah,
retrace. You don't need a
yeah, yeah.
medium.
So seeing that there is no medium inducement and we have a leg that has caused a break of structure, I expected. I mean, I wanted to buy on the.
Mhm,
If you go on the 15-minute time frame, I think you
mhm.
will see an imbalance.
We're
I
here.
think
Yeah.
five
I
minutes,
think that was the one I was just
5
speaking
minutes. Yes,
about. This one right here.
yeah,
Yep.
yes, yes, yes.
This one.
So for me, I wanted to buy from there. Yeah.
From the
I
imbalance.
think if you, yes,
You don't
I
do that.
wanted to
Don't buy from imbalances, bro. Especially a big imbalance like this. Don't buy from it. A big imbalance like this is one of two things. Price either going to react from it, come back and takes it out, or just going to take it out immediately. I
I
don't.
think we had an impulse candle on 3 minute time. Can you go to the 3 minute?
Sure. Or you just talking about this one?
Yeah, 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 yeah,
You were interested in
that
this
one.
scandal. This one, right?
Yes,
Let's talk about this one, guys. Okay. So if you would have
yes,
taken this one,
yes.
now,
Yeah,
if you did take that buy, right?
yeah.
And let me show you something real quick. And it's not, it wouldn't have been something bad you did because, yeah, it's impulse candle. This impulse candle broke above this high,
Mm,
which makes it a valid. The candle
mm,
before it shows you that there were intentions here. But if you're taking a buy from
mm,
here, you're not targeting no more than the next high, the next internals, because now you're dealing with internal price action. If you're going to take an impulse candle type of a trade, you're no
mm,
longer dealing with swing levels. You're dealing with internal levels. If you take a
mm,
trade from up here, though, from the swing, then yeah, you can expect to interact with these types of other swing, opposite swing sections. But if you're going to take internal trades, you're going to be dealing with internal price action. So you would have to go to the 1 minute and position yourself to get out where? At the next level of liquidity. So you would have entered from here. This would have been your stop loss, right? Correct. But then you would have not been able to
mm,
target way up here. You would have had to target
mm,
this level. Why? Because this was the last high.
mm,
This high led to the mitigation low. This will always be liquidity. It led to a mitigation. It didn't lead to even though it broke structure here, it mitigated a demand, invalidated immediately. So you know this would fail. So you know you could target through this. But this one here, may not. So that's why you would exit at it. You either could exit at the bottom of it right here, still catch a 1 and 3, or you exit to see if price is going to induce it and then turn around. Because that would have been most case scenario. Otherwise, if there was something else above here to look at, let's see, go to the 3 minute. If there was a more clear supply to get out from. Okay, I guess you could have said this one as a 3 minute supply, and then you would have just got out right here. Say you said this internal 3 minute supply, price can react from it. You would have just TP'd right here. Or if you wanted to be safe, TP'd at the bottom of this one because this is also a supply right here, but it's internal, this one. And you would have protected yourself. But this would have been just a short corner. You still catch a 1 and 3, so it's not a bad trade. But you just got to be aware of where you're at and understand why you're taking a trade. If you're going to take something like this, it's not a bad trade.
mm,
Personally, I don't trade impulse candles anymore. Nothing wrong with them. I just don't trade them anymore because I understand it has to be these types of reactions. And sometimes it does give you a bigger move, but I don't want to risk the concept because let me show you something. Just within this price action, you know how many impulse candles there is already, bro? Look at this. This is an impulse candle and it broke above. And look at the candle before it right here. So technically, if price is always going to respect these type of impulse candles, guess what? It should have did it for this one too. And look what happened. Takes it out. So for me, impulse candles entries are not consistent enough. And I don't
Yeah,
like
I
moving it's
think
not consistent.
if if there is something that I have to change in my system is the entry models. Yeah, I think entry models.
Yeah.
Also,
Go ahead.
also, my question. So the main question that I wanted to ask is, how do you classify that this is an A plus setup?
Medium inducement has happened. Mitigation happened right afterwards. Keep
Medium inducement
medium inducement. Yeah. Medium, your setup.
and
Remember, you said setup. Remember, that's what I
yeah,
said earlier.
yeah,
You got to be intentional about what we say. You say setup.
yeah,
Setup is like you go to
yeah,
a party, there's a theme. It's a
yeah.
Mardi Gras party. That's your setup. That's the theme. This, a medium inducement or mitigation, that's just the theme. This doesn't mean trade yet.
Okay.
This doesn't mean entry model. This is just a theme.
Mm,
After the
yeah.
theme has been showed up, your setup is presented, your change of
Mm,
character breakup structure, that becomes your entry model. That's your entry for you to take your setup. But
okay.
this whole situation of how do I know it's an A plus? My setup has to have these things: a medium inducement, followed by a
Yeah.
mitigation. Those are for my
Yeah.
setup. And for me to take the trade, to qualify the A plus trade, I need to see either a change of character, break of structure, or a two leg. That's an A plus setup.
Okay. Because if you see in London, we never had any news.
You don't need a medium inducement to
Yes.
retrace.
Yeah. Yeah. We
Why?
did not have an
You only need a
inducement.
medium inducement for
But
reversals. Some reversals,
again,
you only need medium inducement for reversal.
mhm,
You don't need a medium inducement for price to retrace. Price can retrace in two ways, either a minor inducement or a mitigation. Those are the two ways price is going to retrace, right? So in this case, what did you get? You got a mitigation. Mitigation of what? A high that led to a low that caused this internal breakup structure here. If you go to this is 15 minutes, by the way, I'm looking at it at, but if you go down to like a 5 minute, you can see right here. This is a 5 minute high that led to this low that broke underneath this structure. So price coming into here, it doesn't need to have a medium inducement in order to where we're in London, right? Where is London? Especially because the medium inducement had already happened. Asia already did it right here. But when Asia did it, did Asia mitigate? That's why it didn't sell off yet, because the mitigation hasn't happened. You had this previous day taken by Asia. All it did was push to the downside to sweep liquidity to the downside, and it continued back
mhm,
up. So it technically medium induced high, medium induced low. Because this is a previous day low coming from New York. I'm coming from the New York session of this is when Sydney opened at 1700 hour before the start of Asia. What is this? 1700 hour. That's 5. That's when the market closing at 1700. So this is the low of the end of New York session. So this becomes the medium inducement low that led to this retracement to come here, and the price fulfilled this narrative to revert to not this wasn't retracement, this was the reveal. And then it reached this supply to give you the retracement in the form of the medium inducement that came from it. This liquidity is part of that move that helped this retracement. But we're not looking to target these lows because we didn't get that, which you said, we didn't get a medium inducement for you to target these lows. So if you don't get a medium inducement and you see that you've had a bullish BOS in this case, the 15 minutes is where you want to confirm this on your 15-minute time frame. If your 15-minute gives you a low that led to a high that broke above a previous 15-minute high, in this case, as such, you have to expect a retracement. Now, the retracement might be this. Price might just do this and push up again and create another BOS. In this case, then you know that this is going to be the inducement level, and then your entry is going to probably be somewhere here. because now it's probably gonna do this, consolidate, and then take this level out and mitigate here, and then finally push out.
Okay. And how do you navigate 50 reaction taking reactions from 50% of Asia? I mean, if you
Good
expect
question.
it,
After the medium inducement, right?
yeah.
Yeah, I'll find a situation where this happened. There you go, right here. Perfect. So you had a medium inducement here during Asia. Oops. Right. You got this medium inducement here, Asia. Why is it a medium inducement, guys? Because it's a New York high, New York low. Price opened up in Asia, took this level out. Let me see if there's any more on the left side it took. No, this was the only one. Cool. It took it out. Did the mitigation happen? Yes. Look, the mitigation was in there. The same way that Erson asked me earlier, right? Look, price did the exact same. It did the mitigation while taking the medium inducement. So in these cases, you're gonna get the reaction. See, this is it right here. It already did the inducement of that level. In this case, like I was telling Naylor, you want to expect the level to get taken out because this entire thing not done yet. The whole demand is still here. You're not selling, I mean, you're not buying aggressively from here though. You understand that price is still within the level. It hasn't break it yet, but you're following the narrative. Now, if price gives you an entry model, then you understand, okay, you can continue. It's giving you confirmation. It's respected the level. So in this case, what did it do? Asia came, it gave you first. This is a mitigation. It pushed out. Boom. Price came back again, induced it. Medium inducement. Boom. Same after the medium inducement, you got that mitigation happen here. Ooh. Now we're interested. We're not trading Asia, but we're interested to see what happened next. Asia gives you bullish push out. This is 15 minutes, by the way. Remember, your 15 minutes. Use your 15 minutes for your structure. BOS. Previous high that led to the inducement of this low now has been broken with a body. Cool. 50% of Asia. You grab your fib tool from the low of Asia to the high of Asia, which in this case is right here. Not this one. This is Frankfurt, the high of Asia right here. And where's 50%? Right here. So you go to the 1 minute. I hope I didn't lose it. I kind of did it too fast. Let me make sure I get myself back right. Okay. 5 minute. Where are you? There we go. And 1 minute. Boom. So where are we? Zoom out. 3 minute. So this one. There we go. Okay. I'll keep it on 3 minutes. So 50%, let's see, what does that setup look like for you? 9 out of 10 time, your 50% Asia entry is going to be two ways. You can either take it aggressive on the final inducement, which sometimes there's a demand, or you can wait for the confirmation of a two leg. So there's two ways to enter it. So in this case, where's my fib tool? Did it go away? Yes, I guess it did. No worries. So from the low of Asia to the high of Asia, right here. Boom. 50% level. What lies in 50%? You've got this 3 minute demand right here. Now, before, let me clear this up to give us even more understanding. Look how clear price is gonna confirm these biases for you. Let me clean this up. Look at this. What is here? Look at this. You've had, let's look at the narrative. This low, this high, right here. Retraced, induced above it. Boom. This inducement then comes back down again and induced this level, this low. And which one led to the BOS? This one didn't lead to this inducement. This inducement did not lead to a BOS. It led to another inducement, and this one led to a BOS. So now this becomes strong. So now you understand you've got a inducement level from here. Oops. Clear. Right here. You've got this now, your inducement level. You grab your position tool. You'll say from the low of the level to the high of the zone, and you push yourself across here. And this could have been your entry coming into the session. Now, price already mitigated before your session during Frankfurt, before your 3 a.m. So now you're not interested into this level because now price is just trying to create a trap because most people are going to say, oh, it already reacted from 50% level of Asia. So now they're saying, well, this is going to be an entry for you. But how is this an entry? What has this caused? This led to nothing. All it did was just come up here and bump heads with this level. It didn't break anything. It didn't break not a single internal structure. And it's happening in Frankfurt. What do we talk about? It's happening in a trap time. So of course the market gonna make it look enticing. Look how obvious this demand looks. That's why we always say don't trade obvious zones, especially when it's coming from a trap session. So in this case, you tell yourself, I know price needs to leave from 50% because I've had the medium inducement during Asia, I've had the mitigation, and I've had the inducement that led to a BOS of a 15-minute BO of a 15-minute level. This one right here. We already had this mark. This is a M15 BOS. This level right here. So it wouldn't make sense for price to all of a sudden just come down and break this level. This will be that market structure doesn't make sense. For you to break a M15 high like this and just come straight down and flush, how? Trump would have to say something crazy or something has to happen to make this happen. And even if he says something crazy, I don't even think it would go that way. It would just induce it before it breaks a body because that just throws off market structure. But in this case, you know that this is a trap. All you telling yourself is, okay, you could do one of two things. Either anticipate for this to be induced while still respecting this level. And if you were to take your position, you would have your stop loss, obviously. You would have your stop loss. You know, you'll be generous. You'd look to your left, you see all these little wicks. Impulse candle right here, candle before the impulse, since you like your impulse candles as well. And like right here, look,
I
impulse
don't like
candle.
it from today.
Look, impulse candle. Nothing wrong with it. I'm not saying it's not nothing wrong with it. You just have to understand how they work. As long as you
Of
understand
course.
why, the what is easy. You just have to understand why you're doing it and you'll get better with for sure. But yes, impulse candle before the impulse, and the impulse did cause a BOS, right? So you could have said, okay, I'm just gonna cover it overall at the bottom of that impulse candle. It's still within your pip range count, and you could have taken that entry. Now let's say you wasn't sure, you don't fully trust it, you're not sure, you say I'm gonna wait for confirmation, then yeah, you still got your two leg. This is why price gave you a two leg. After the mitigation low, you say I'm gonna wait for confirmation, you waited. One leg, retrace. And what did we say about the retracement? To confirm, you grab your fib tool, make sure it's a true retracement from the high. What did it come? 618. Cool. So we know that's right. So let's get clarity. One leg, retrace, two legs. Change of character. But guess what? We know that we want to see this low get taken. But did price immediately come to it? Like we were when I was talking to Naylor, it didn't. So this is the part where I was talking about sometime you might see the internal one. So it did this one and it created this next one up here. So guess what? Now I'm gonna tell myself, okay, this will be my entry from this level, but I would not position my stop loss at the bottom of here. I will still cover the overall low because I know that price can easily come here and leave me and not come get me here if I'm waiting for it here. Why? Because it already created this internal structure to take. It doesn't need to come take this one. So in that case, I would say, all right, let me take my long tool. I would start from right here. And I will put my stop loss right underneath this, 5 pip stop loss. And I'll still target the next liquidity, which will be this New York AM or a 1 to 5. This is why when I was telling you guys earlier, I've slick in my data, 1 to 3s, 1 to 5s, I don't miss. 1 to 3s, 1 to 10s, cool, because I could have taken 1 to 3 and then target the 1 to 10, which would have been the London higher way up here to finally get 1 to 10. Yes, that would have been very possible, but in this case, 1 to 3, and now 1 on 5, I would have been out of the trade and let the rest go. So that's how you take a entry from mid-level of Asia. 9 out of 10 time, guys, it will look exactly like this. That's the beauty. That's the best part about the mid-level of Asia thing. It's very consistent. It's not going to be too many times it's going to try to create some crazy narrative to throw you off. The only thing it will try to throw you off with is building liquidity under you, where you're going to fear that this level might get taken like this. You'll see this trend line. You'll be like, oh no, price is going to take out this trend line first before I'm going to wait for this inducement of this trend line before it goes. Or you might say, oh, I want to see this is relatively equal lows. So I want to see these relatively equal lows get taken out first before I take my position, which would be this level. And you will say, oh yeah, this is relatively equal lows. But really, you missed the context. This minor inducement led to this BOS. This medium inducement and mitigation led to this BOS of a 15-minute supply. I mean, a 15-minute level. That's high time frame context. You get me? So you don't want to forget these high time frame contexts because the 1 minute and the 3 minute giving you all types of liquidity buildup that's gonna shy you away from your trade. All right. Hope that answered your
Okay.
question, brother.
Yeah. Thank you so much.
Of course, man. Guys, anyone else questions? I'm sorry if I didn't get a chance to do it today. What's tomorrow? Tomorrow's Saturday. I got a lot going on tomorrow. Um,
Hey, can you hear me?
yes, I can hear you.
Sorry, I wrote something on the chat. Are you able to kindly please explain? You know, today I entered sales. I really was so adamant on EU
Mhm.
during Neo session.
EU, EU.
Is that an inducement on a 15-minute? Because you know, I get so
This is
confused
we was
with the
on
induce.
GU. We was on GU just now. This is EU.
Yeah, EU. Yeah, it's that one.
Okay. You said you were looking for sales?
Yeah, New York session.
Yeah. Let me see with daily. Tell me the context already. Very easy. All right. So in the daily, this was the daily. Came in. We had not one, not two, not three. Okay, well, three levels of liquidity taken. Why were you looking for sales? You have three daily
Um,
lows taken, which was a form
that
of
wasn't
trade.
today though.
Well, no, it wasn't taken today, but this was your today's candle, right?
Yeah.
Ah, got it. So this was a okay. I see what you're saying, especially because look at this. Price has already retraced and fulfilled this. If you look at from this fib, you can see already reached 50%. So I understood why you would be interested in a sell. And this is the part
Yeah,
where
but on a 50, yeah,
Mhm.
on a
I
15-minute,
think
would
we
you say
had medium inducement on London session, if
Yeah,
I'm not
I'm gonna
mistaken.
go down to the time frame and get a clarity for you. I'm just marking this to show you something. Remember earlier when I said if you don't get a previous day level taken during when you're coming into your session, it can get complex. Price can create a
didn't?
lot of traps for you because these are the times where you don't have the liquidity on your side. So let's go into it. So New York, you said you were looking for the buy. Let me get this. That's probably why I couldn't see all the chart. New York, you was looking for a buy. So what did we get New York? Asia opened up, taking previous day highs. So Asia had medium inducements.
Can I ask you a question? You see, that's not, you see the way I look at it, that's not even the previous day high. The previous day high is there next to Asia, right? Or am I mistaken?
It's about this New York AM.
Yeah, but that's not really the high, is it? The way I look at it is that's the high, London high. So that's
This,
the previous day high, ultimate high.
well, then you're basically saying that New York isn't considered a structure. New York is not considered a medium inducement.
Yeah, no, you're right.
Yeah, there's a reason why it's marked as New York. You have New
High.
York and London, so you can't disregard it and only look at London as a significant high because it can easily take a New York as a medium inducement and leave. You know what I mean?
Yeah, no,
So
yeah, yeah.
you don't want to disqualify it. But yeah, so Asia took this one, but all it did was create this retracement. Cool, the retracement push up here in London, but you were looking for New York session. So your sell, I mean, your sell happened around 11 something. If you're trying to get the context as to whether or not how would you have entered, let me look at this real quick. All right, you had this bearish break of structure. So if you grab your fib tool, you already reacted from this M15 supply. From this high to this low, price came to 50%. Yeah, I don't think it's done yet, to be honest. I don't think it's done
Very
yet.
true.
Yeah. One of two things can happen. Yes, it can leave from here because it is 50% and price can still come to this 1 hour supply. I mean 1 hour demand. We go to the 1 hour, let's find context. Why is this demand significant or important? Remember, high time frame holds precedent. Okay, what do we have here? Okay, we reacted from this big old zone here. This is a previous day low. Okay, so we coming from this previous day demand. All right, so as you can see here, previous day demand, price came into it, taking all these levels, tapped into it. Okay, so it starts to build up here. I know from this high to this low, we need to come to where? To at least 618. Who got invited into the market so far? Break and retest. Cool. So I'm like, price still needs to come higher. But right now it's giving a reaction on a 50% as if it wants to come lower. Okay. I'm not gonna fight with price because it could still leave this as liquidity, come deeper into this demand, and then go back up to come into these levels, then take the big demand out. So I won't try to predict it. So let's go back to the 15-minute. Understanding these contexts now, I'm looking at it like this. Why would price want to come to this 1 hour first before going up? And this is where I'm gonna zoom out, understand this low right here led to this high, broke structure. This low led to this high, broke structure. This is an Asia low. This is a London low with a resting demand right here. I look over, trend line, one tap, two tap, three tap, price continued, started taking the trend line. Is the entire trend line taken yet? No. There's a London low right here that's not taken. There's an Asia low right here that's not taken. So if I'm seeing prices doing this type of setup, I understand why. Because New York low, London low next to each other, like we were just talking about earlier. London low, New York low. What is here? London again, New York low. So what do you think may happen during next week opening? Price is going to eat these up. It might gap, or it might just open up in Asia and then takes it, bounce up here and then do the move that you were, that most people were anticipating to happen right here. They kept getting faked out. So I didn't trade. I was on the road all day, so I didn't see the whole session. But just clearly looking at this here from like a 5 minute perspective, London already did this bearish BOS, took the Asia low, came to this level, which is now in my eyes a support and resistance level because of all these wicks and these candles area. If I was in this session, what did New York present me with? Let me go to 1 minute. Da, 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 da. What is this? Did this take anything significant this low? It just did a minor inducement of a previous day level here. Was this a 15-minute level? If it's not, then
Yeah.
it was. Yeah.
It took, you see those equal lows.
These, yeah, it was. So it was these equal lows because it didn't take it on this wick right here. It took it on this one. So this would have been, okay, this could, let's say this was our medium inducement during the opening of New York, then we would wait for what, our two-leg protocol or our change of character break of structure. This happened within kill time window. Perfect. So we say, we grab this, we'll say, okay, this is the inducement. One leg, retrace, two leg, wait for the inducement of this level, my entry. See how consistent my entry looks? It looks the same every time, guys. One leg, retrace, two leg. You want to see the low that led to the chalk get induced, and then you position yourself underneath it. So in this case, why would I position myself in this one? Well, because that's where the demand is. Impulse candle, candle before the impulse. These are the ones you want to try to take, my guy. If you're looking for the impulse candle, candle before the impulse, one that's resting within a demand. At least you know that even if it, it doesn't give you a real move, you got the demand giving you extra liquidity to push out. And yeah, and I would have taken it from right here. This would have been the entry. You cover the low. If you want to be safe, you're going to cover the overall low as well, which is this one, then the previous day New York one. You could have covered that one. And then you target the next level of liquidity, which in this case is, let's see, you can even target next level liquidity. You'd have to target the next supply zone. So this higher led to this low, this higher led to this low, which caused the inducement. So you would know that this one's gonna fail. Therefore, you target to up here and you get out right here for a 1 to 4. And if you want it to be safe, you can target get out right here at the bottom of it to say that this is because you could say this is the big zone, right? You could say this is a big zone. So instead of trying to target all the way to the smaller side of it, the refined version, instead of trying to target the refined, you could have said, I'm just going to respect this entirety of it and just TP at it. And you still catch a 1 and 3.
Yeah, thank you. Do you know,
Yeah.
the mistake I always make is I don't really look at the 1 minute. I always look at the 5 minute, 3 minute, and that's it.
That's okay. If you wanted to do it on a 5 minute, it's just that you might not, this move right here was not going to be for a 5 minute price action.
Very clear.
But
Yeah.
let's see if it gives you a 5 minute move because the market does give different time frames opportunities, but you could have gotten it. So on a 5 minute, what you got instead was the chalk and BOS because you're not going to get a two leg from a 5 minute. Like you got to count that one out. Two leg is a 1 minute thing. So on a 5 minute, what'd you get? Low, high, retrace. So this is already your change of character right here because this was the internal high that led to the low that broke underneath here. Now I pushed above, it breaks. So this is change of character, retrace. You missed this entry, pushed out, didn't break above it yet, so you don't have breaker structure. Came here, didn't break underneath here, so you don't know where you're at yet. You're in no man's land. Then it pushed out. Now you got your BOS, and then you position yourself from right here. Because on a 5 minute, you don't need to wait for the same inducement as you do on a 1 minute. Because
Yeah.
price respects breakup structures of 5 minute levels. So if a 5 minute caused a BOS and left the demand, price can respect it if it didn't mitigate like reach your invalidation model. So this would have been your entry. So where would you have taken it? You would have took your buy from right here, covered this level here as your P. You could even cover it here for a 4 pip stop loss just to be safe in case you say, okay, maybe price induces this level, and you still target. Let me see. You would have to target the refined version at this point, because if this is the case, price would go deep. Why would this go deep? Matter of fact, you would have to target past this, because you would know on a 5 minute, price reached here, fell to mitigate this supply, right? Look how close it came to it. It failed to mitigate it, returned back to your demand that led to the internal BOS right here and mitigates you. So now you know that this becomes an invalidation model of this one. So this becomes a zone that's going to fail, and you target the tip of it for your 1 to 3, 1 to 4. So this is how you would have entered from a 5 minute position of this one. So it gave you both
Yeah.
setups. It literally gave you both setups. It gave you a change of character, break of structure on a 5 minute, and it gave you the 2 leg protocol on a 1 minute.
I did not see it. I saw it afterwards.
It's okay.
After I entered
Yeah.
cells twice, and I said, no, I'm done for today.
Yeah, that's why I love to say practice a lot of the hindsights also, because it makes your clarity easy. So you see a demand like this gets induced a 15 minute.
Sometimes I take losses, then I see it afterwards. I'm like, oh, but now I can't afford to enter the actual trade.
It's okay, happens. It's part of trading. That's why you have to risk accordingly. If you see a trade, you take it and you're not too sure about it, it hits stop loss. The next opportunity shows up and you don't want to take it aggressive, just wait for that one confirmation and then take it again. You know what I mean?
Yeah, no, thank you so much. Are you gonna upload this onto YouTube?
Yes, I will. It probably won't be tonight because I'm actually running late for where I was supposed to go. I got an hour
Yeah,
drive.
thank you.
But it'll probably be tomorrow before I leave from
Uh,
here. I'll upload it tomorrow. Yeah, I'll do that.
all right, Shala, thank you so much for your time. Really appreciate it.
Yes, yes, you guys welcome, and thank you all for showing up and having interactive, amazing questions, and helping everyone else learn from you all, because what you guys experience, someone else hasn't experienced or didn't think about, and it's going to give them clarity. So, kudos to everyone, man. I think you guys are doing great. Stay motivated, stay inspired. I love to see how you guys handle these failures, like stop losses and failed prop firms. I love that you guys find humor in it, because you shouldn't let it affect you mentally, because trading is not hard. It's simple. It's not easy though, but it's simple. We just make it hard because we do too much. We just, as you saw, every single time I've shown anybody an example of how our entries look, you've always saw those 2 legs look exactly the same. There had to be an inducement of that previous one that caused a chalk. The change of character break of structure, if you were waiting for that one, chalk BOS, the one that led to the BOS, use your fib and use that one as your premium level that you want to look for price to come back to sell again, and you want to cover the high of it. You know what I mean? So hope you guys all have a good night. Sorry for the late run. It was supposed to be an hour call, but we ended up being 2 hours. But hey, look, as long as we're growing, that's all that matters. All right, y'all.